You are not behind. You are not unlucky. You are just doing exactly what the financial system trained you to do, and it is quietly destroying your wealth. Today, I am going to show you 5 investments that I am personally putting money into in 2026. And more importantly, I am going to show you the one habit that is silently guaranteed to keep you broke forever. Stay with me. This changes everything. Here is the uncomfortable truth. The rules that worked in 2020, in 2022, even last year, they are dead. 0 interest rates are gone. The era of throwing money at unprofitable companies and watching them moon is over. And the people who have not adapted, they are not just falling behind. They are actively destroying their financial future, dollar by dollar, every single day. I have been investing for over 40 years. I have survived the dot-com crash, the 2008 financial collapse, and a global pandemic. And the number one mistake I see, from first-time investors to people sitting on million-dollar portfolios, is the same. They are playing the game as if nothing has changed. It has changed. Everything has changed. I am not a talking head on cable news. I am not some 22-year-old influencer selling you a course. I have built and sold companies worth hundreds of millions. I sit on the boards of major global funds. Every week on Shark Tank, I watch brilliant entrepreneurs fail, not because their idea was bad, but because they did not understand the math of money. I am going to give you that math today, for free. Here are the 5 investments I am focused on right now to build wealth faster in 2026. Number 1, Dividend Aristocrats. Not just any stock that pays a dividend. I am talking about the elite group of S&P 500 companies that have not just paid but increased their dividends for at least 25 consecutive years. Companies like Procter & Gamble, Johnson & Johnson, Coca-Cola, Lowe's. You use their products every single day. They have pricing power. When inflation rises, they raise prices, and you still buy the toothpaste. I think of these stocks as bonds with a kicker. Many yield 3%, 4%, even 5%, and unlike a bond, they raise their payout every single year. In 2000, my tech stocks got cut in half. My dividend payers kept sending me checks. I took that cash and bought more tech at the bottom. In 2008, while the financial system was melting down, Procter & Gamble kept paying me, and I bought distressed assets while everyone else was frozen in fear. That is how serious wealth gets built. Buy the basket, look at Nobiel or VIG, set up a monthly purchase, treat it like a bill, and never sell. Number 2, North American Energy. I know, it is not exciting, it is not a cool app, but energy is the blood that flows through the veins of the global economy. For a decade, management teams borrowed billions every time oil prices rose, flooded the market with supply, crashed their own prices, and destroyed shareholder value. Then 2020 happened. Shareholders demanded cash flow, dividends, buybacks, and for the first time in memory, they actually listened. Today, companies like Chevron and Exxon are generating free cash flow at levels we have never seen, profitable even if oil drops to $50 a barrel, and the midstream pipeline players like Enterprise Products Partners and Enbridge, fee-based models, 7% and 8% distribution yields, they get paid to move the oil regardless of what the commodity price does. Buy XLE for broad exposure, AMLP for pipeline income, and do not bet on the price of oil. Bet on the infrastructure that profits no matter what. Number 3. AI infrastructure, but not the way everyone else is playing it. Every investor is chasing AI software startups asking who will win with the chatbot. Stop. That is a guessing game. Most of those companies will fail, their software will become a commodity, and their cash will burn. I play certainties. AI runs on chips, and the companies making those chips are where the actual money is. I am buying the picks and shovels ecosystem, TSMC, which has a de facto monopoly on leading-edge chip manufacturing, and ASML, the Dutch company with a virtual monopoly on the lithography machines required to build advanced chips, with a backlog stretching years and billion-dollar price tags per machine. I used this same strategy in the early internet era. I did not know if pets.com would survive, but I knew everyone needed Cisco routers to move data. Buy SMH, the VanEck Semiconductor ETF, for diversified exposure to the entire trade. Number 4. private credit. After 2008, banks got strangled by regulation, and after the regional banking crisis of 2023, it got worse. Private credit funds stepped in, and they are charging a premium. Floating rate loans yielding 8%, 9%, 10% or more, cash-on-cash returns almost impossible to find in public markets right now. This market has exploded into a trillion-dollar asset class, and Blackstone, Apollo, and Ares Management have built their entire growth strategy around it. You cannot lend directly to a mid-sized company in Ohio, but you can buy the companies doing the lending. Look at Ares Capital, ticker ARCC, a publicly traded BDC with consistent dividend yields of 8 to 10%, or the asset managers themselves, Blackstone BX and Apollo APO. Number 5, and this might be the most important thing I say today, strategic cash. The biggest mistake most investors make is being fully invested at all times, thinking cash is a drag, thinking 100% exposure is the goal. It is not. It is a trap. When the market corrects, and it always corrects, every single time without exception, the fully invested person has no ammunition. They panic, they sell at the bottom, and they watch the opportunity of a lifetime disappear. Today, you can earn 4% to 5% risk-free in a money market fund or short-term treasury bills. That is not a drag on returns. That is a strategic weapon. I did this in 2008. I did it in March 2020 when the market dropped 30% in weeks. I was not crying. I was buying quality assets for 50 cents on the dollar, and the only reason I could do that was because I had the cash. Keep 10% to 20% of your portfolio in cash or cash equivalents right now, collect the 5% yield, and wait for the fat pitch. When the market hands you a 15% to 20% discount, that is when you step up and swing. There it is. 5 investments for 2026. Dividend Aristocrats for cash flow, energy for value, AI infrastructure for growth, private credit for yield, and strategic cash for opportunity. Wealth is not built by accident. It is not built by luck. It is built by design, by following a system, by being disciplined when everyone else is emotional, by understanding that the stock market is the only store in the world where people run away from a sale. 2026 is going to reward the prepared and punish the gamblers. The question is which one you decide to be. If this gave you real value, hit that like button, subscribe, and tell me in the comments which of these 5 surprised you the most. Money does not sleep. Neither should you.